Here's a deeper analysis of today's global economic trends. Detailed economic and sector-specific trends, inflation, and monetary policy. United States, inflation remains an ongoing concern, with the Federal Reserve signaling that interest rate adjustments may persist. Although headline inflation has cooled slightly, core inflation is still above target, prompting caution. Europe, inflationary pressures remain high, especially in energy and food prices. The European Central Bank ECB continues to adopt a more hawkish stance to stabilize prices. Asia, Japan maintains a relatively loose monetary policy to combat low inflation and encourage consumer spending. Meanwhile, inflation rates in China are controlled, allowing for stable demand growth without excessive monetary tightening. Employment and labor market insights. United States, employment data shows steady growth, but wage inflation remains a focal point as sectors like tech and manufacturing push for skilled labor. Unemployment remains near multi-year lows. Europe, labor markets are relatively stable, with low unemployment in Germany and France. Wage inflation, however, is an emerging factor due to cost of living adjustments. Emerging markets, regions like India and Brazil, are seeing employment growth, but at a slower rate as sectors such as manufacturing and services balance inflationary constraints. Regional and sectoral performance. Technology, US and Asian tech stocks continue to lead due to strong gains in AI, cloud computing, and semiconductor sectors. The Nasdaq's 26.73% YTD gain exemplifies this momentum. Japan's tech sector, as seen in the Topix 100, also contributes to the regional performance. Energy. Volatility is prominent, with traditional energy stocks performing variably across markets. Renewables are gaining traction, especially in Europe, where sustainable investments are on the rise. Financials, banks are benefiting from higher interest rates in the US, while in Europe, profitability is challenged by regulatory constraints. Asia's financial sector remains stable with modest growth. Consumer goods, higher input costs due to inflation are affecting global consumer sectors. Europe and the US are seeing shifts in consumer spending patterns, focusing more on essentials. Investment sentiment and capital flows. US. Optimism continues with a high market signal of 77%, but mixed signals globally temper expectations. Emerging markets, capital inflows into emerging markets remain moderate as investors weigh growth opportunities with geopolitical and inflationary risks. Europe and Asia, European equities are impacted by high inflation and cost of living crises, while Asian markets see growth in investor interest, particularly in technology and green energy sectors. This landscape highlights a mixed but resilient global market where investors are balancing growth in tech and green energy with cautious strategies in response to persistent inflation and employment shifts.